Welcome. Today I wanted to talk to you about a great opportunity on the stock market connected to the Intel Corporation. This is an American stock, and as you can see, there was a huge price drop. In recent months, the price dropped minus 60%, so from $50 per share all the way down to $20 per share. And if we look at the maximums of the price, we can see that the price was around 64, while right now it's 20, so that's a drop of 70%. Oh, and by the way, this podcast is in MP4, so there is also video, but I will talk about everything you can see on the screen. So you are safe to watch it only as audio, only to listen, or listen and watch, whatever you prefer. So is this huge drop in price connected to the real risk and the real business itself? Is Intel failing, or is this an opportunity for us to enter into the market and grab a nice company for a very low price? In my opinion, looking at the recent happenings connected to the company itself, this drop is overblown. There is a lot of fear on the market, and not a lot of people understand exactly what is going on. The microprocessors, the CPUs, this is quite a hot topic. If we look at all of the competitors of Intel, like AMD, or Taiwan Semiconductor, or NVIDIA, all of those companies that are from the same sector, they do similar things, their price looks completely different. So Intel was this low back in 2012. So the last time Intel stock was $20 per share was longer than 10 years ago. It was 12 years ago. So it's a great price. The question is Intel in big trouble? Is this company really worth only this much that it's worth after the drop? If we look at AMD, we can see that the stock is going up only in the most recent months, most recent quarters. We can see some correction going from 220 to 150. On NVIDIA, we can still see a huge movement up. Yeah, but there was also a great move up in the earnings of that company, and also currently it's the hottest stock there is worldwide, probably. So there is a huge optimism. A lot of people are looking at the stock, a lot of people are buying the stock, so the price shoots up. With Intel, this company also makes CPUs, so they're used for AI, but the stock price is not reacting the same way. And why is that? The most basic explanation can be found in the financials, in the income statement of the company. So the revenues in the last 2 years actually dropped from 80,000 millions to 54,000 millions. So that's billions. So we'll just talk in billions. So revenues dropped from 80 billion to 54 billion. So that's a huge drop, but it's not as big as the drop in price. But if we look at the profits, then we can see a very huge drop in the operating income of the company. They were making around 4-5 billion quarterly, and right now they are losing around 1 to 2 billion each quarter. So that's a huge drop, way more than 60%. And the question is, are those problems that this company is currently in long term or short term? Is this something to worry about in the long term, or is this an opportunity to buy this company for a very cheap price because of the fear that is connected to the short term problems? So what's the problem with Intel? Intel's chips, the CPUs, were burning. They were getting too hot and were basically crashing. So they just stopped working. You had to restart your computer, or during some process they crashed and you had to restart the program, or they could also completely burn. So too much heat on your CPU can burn it over time, and in some instances the CPU just becomes completely broken and you need to get a new one. So that was the problem with Intel. And what was the cause of the problem? And this is the most important part. The cause of the problem were actually the motherboards. So motherboards are not produced by Intel. Okay, maybe they are producing it, but those motherboards were produced by different companies, and they made, it was a semi-illegal move, because using code on their motherboards, they increased the load that the CPU can take. I will explain it in simple words. So basically, there is the speed at which the processor is operating, and you can increase that speed on your computer manually. So your CPU, you can boost it and it can work faster. And that's, if you as a motherboard manufacturer increase the speed of the processing of the CPU, that's illegal, you cannot do that. But instead of increasing the speed, they increase the amount of things that the processor can work on at one time. So they moved around sneaky, and they didn't increase the speed of the processor, but they increased the amount of tasks that the processor was doing at the same time. So it also is like boosting it, but in a different way. And the Intel wasn't 100% secured against that move from the motherboard companies. So first of all, what failed? Their agreements, like licenses, etc., they weren't super descriptive, and there was this hole that the motherboard companies could go into and boost the CPU in order to show, okay, look, my motherboard is so good, it's quicker than the other motherboards. Well, it's not really quicker. You are doing something that is a little bit illegal in order to boost the performance of the CPU. And what happened after that boost? The workload on those processors increased, which led to them heating up, and later some of them burned or crashed, and that was the cause of the problem. Was this because of Intel? The main blame, in my opinion, is on the motherboard producers, but Intel also made two mistakes. So first mistake, their agreement, or like, you know, the laws, what you can do with the processor, etc., they weren't very strict. There was a way to go around it. So that's the first problem. So like the user agreement or something. And the second problem, it was a bug. They discovered a bug that was letting the motherboard increase the amount of electricity that was going into the CPU. So for more workload, there also has to be more electricity or something like this. And the chip should kind of defend itself from getting more of that, but it didn't because of this bug. So the most important question, is Intel going bankrupt? They had problems with the recent chips, so the chip number 13 and chip number 14. So the two last generations of Intel chips, they are the ones that are burning the most. So they are the high-end CPUs, the top CPUs from Intel. Is this the end of Intel and the end of their dominance and the end of their presence on the high-end CPUs market? This is the most important question, and I have the answer for that. But let me talk about first what will happen if we see the comeback of the earnings and what happens if we don't see the comeback of the earnings. Let's start with the negative. So what happens if Intel goes bankrupt? What happens if people don't start buying and they are still bringing in negative profits? So at some point the company will fail for bankruptcy. But if we can see on the book value for Intel, let me Google the current price to tangible book value. So no intangible assets and no goodwill. That price to book value ratio is 1, not counting in intangibles. When we count in intangibles and goodwill, then the price to book ratio is 0.75. So even if this company goes bankrupt, it will probably be bought by some other player. And as a shareholders, we can expect it's very difficult to lose money on an investment, because even if the company goes bankrupt and everything gets sold, we will get most of the money back. So even in the unlikely event of this company going bankrupt, you will get your money back, at least a significant portion of that. Also, currently, the price to book ratio is very low compared to history. Let's click on more details and let's see what is the book value for this company on like historical time chart. So usually the price to book value is around 2 in most recent years. So from 2018 to 2021, that book value ratio was around 3, 2.5. So let's take a lower estimate. Let's say that the normal price to book value ratio for this company is around 2. The current book value per share is $28. So in the event of that problem with the chips, if it's a short term and we can see the earnings going back and the company going back to its normal operations, the price will most likely also go back into the standard price to book ratio that we could see historically. So if the current book value per share is $28, and we say that on average this company has the price to book value ratio of 2, and remember that's like conservative, that's like safe, that I could easily say, okay, we'll go to 2.5 or we'll go back to 3. I could say that, but we are taking a very defensive stance here, and we are saying that the price will go back, the PB ratio will go back to 2. Then we have to multiply the book value per share by 2. So that's 28 times 2, and we get $56. $56. If everything goes back to normal, we can expect the price of Intel to go back to around $56 per share. And with the current price of $20 per share, that's around 200% profit. And this profit can be most likely very quick, because if this truly will be an undervalued stock, if the earnings of this company go back up, there will be this undervaluation on this company. And most likely, of course, the undervaluations can last for a year, for 2 years. It can take a long time, but it's much quicker to buy an undervalued stock than to sell an overvalued one, at least in my opinion, because a lot of people are looking for those undervalued stock. And if we can see the sentiment around Intel changing, as it will change when the earnings come back, and the expectations of the analysts from Wall Street also change, because how do they do? Okay, so right now, that's also very important for you to understand long term. When you are an analyst on Wall Street, in any financial institutions, you are using the informations that were told to you by the universities. those models are very simple and they usually work using past data. So if in Intel you see a drop in earnings that's negative, then the guy who estimates the future cash flows will also say, okay, I can see it's dropping down, so because of the financial models, I can expect the future quarters to also be negative, and only then in the future, as they finish some of the production manufacturing sites, the profits will increase. So because they are basing their opinion on the past, not on what's really happening inside of the firm, those their indicators, their forecasts are most likely too pessimistic currently. If they saw the Intel a few years ago and they saw all of those positive price action, they wouldn't be able to predict that, oh, their most recent chips having problems with overheating. They don't know shit about Intel. They just put in numbers into their formula and hope everything works out fine. They don't really care. When you have your money invested in a fund, they will charge you even though they are losing money. So really, don't worry about the forecasts of those analysts. Although if you do worry about them, they currently say that the stock price should be around $27. Sorry, dollars, not euros. So even if you take in account their forecast, you're still seeing margin of safety of around 25 or 30%, something like this. So yeah, but I expect this company to not go bankrupt, and I now understand that the problem with those chips is really a problem with the motherboards, which takes some of the blame from Intel. Of course, they made those two mistakes. The agreement wasn't very specified, which made the motherboard companies able to boost the workload of the chip, and there was also this bug that allowed more electricity to flow into the CPU. So it's not like they didn't make any mistakes, but it's not that their chip is shit. You can normally use their CPU. You just have to get an update for the motherboard. So if you update the motherboard and you get rid of this code that increases the workload of your CPU, it will work correctly. So it's a short-term problem. And I talked to my friend who is an expert. He's basically a programmer. And he told me that in his opinion, this is also a short-term issue. And Intel already solved the problem with the chips on the laptops. There is still problem with the chips for like PCs that are also used in data centers, etc. So it's yet to unfold fully, but yeah, I think this company is just, the stock price is just depressed. There's a panic on the market. A lot of people, especially the okay, I will not hate the financial institutions more, but remember, they're looking at some mathematical indicators. There are a lot of the financial analysts, they don't understand what's going on. They don't know how to think about the stock market. It's something that they hope goes up the next day, and if they see a drop in price, they put it into their models and get some answers that they don't really understand what the models even do. They are very complicated. And in here I can see a lot of pessimism around the stock. What else? I can see a huge drop in dividends. Dividends went down 90% or 80%, something like that. So there was a huge cut in dividends. What does it mean? Is it a positive for me or is it a negative for me? So first of all, let's talk about dividends themselves. Is it good for a company to have a dividend? In my opinion, it's not really my opinion because I don't use my own investing strategy. I copy the investing strategy of people like Peter Lynch, Warren Buffett, all of the top investors worldwide. If the company has a way to, let's say that they make $100, and they can either buy more machines using this $100 or pay the dividend, I would much rather have them buy the machines, and I will explain to you why. If they spend $100 on the machines, they don't have any profit because they spend it all on the machines. So how much do they pay in taxes? $0 in taxes. What happens if they pay you dividend? So first they have to say, okay, we have this net profit of $100, so they will pay tax on that. Different companies pay different taxes. I don't know how much the company that you are currently analyzing pays in taxes, but we'll say they pay 20%. So they will tax, they are paying $20 in taxes, so they have only $80 to pay as a dividend. Okay, so they pay you that $80 on the dividend, and you have to pay tax on it also. I don't know what's the tax rate for dividends in your country. In my country, it's around 20%. So 20% of 80, that's 16. So in total, if they pay you the dividend, you and your company will pay $36. So that's 36% in taxes. But when the company doesn't pay the dividend, how much do they pay in taxes? Zero. Everything goes back to the business. You don't pay any taxes. It's a massive difference. The question is, does this company have a way of spending all of that money it's bringing? Sometimes I would much rather get the dividend than to have my company spend it on some bullshit. So sometimes they have a way to invest their money. They can buy some more machines, more buildings, more cars, hire more people, etc. But sometimes they don't really know how to spend that money, and then I'm okay. Then I prefer the dividend. But normally I prefer them to spend it all. So in case of Intel, we can see that this company dropped the dividend by minus 90%. This is also very important. Why do I think it's great? Not only because they will spend it all, build more infrastructure and pay less taxes, but I like it also for this second cause, which is a huge drop in price. As you can see, the price dropped massively, minus 60% here on Intel, and I know that there were some funds, big banks and individual investors, smaller investors, that were buying this Intel stock because of the dividend, because they think of themselves as individual investors, as a dividend investor. They just love dividends. I know people like this. A lot of people love dividends. Or maybe the funds, those were like dividend funds, etc. Or maybe they used some models using the dividend, and when the dividend dropped, they had to sell. They didn't sell because the company was going bankrupt or anything like this. They sold because it wasn't paying them dividend. And it's probably not majority of the sales. I think majority of the sales are probably because of the fear connected to the company itself. But the funds, I think a lot of funds could sell just because they are offering a product this is a dividend fund, and they just cannot hold anything that is not paying dividend in a dividend fund. They don't have to think, is this even a better opportunity to buy Intel, or is it worse? They don't care. They just got rid of it because it's not paying dividend, and that's it. So in my opinion, if you want to get in on the AI hype, I don't believe I'm saying this, but this Intel opportunity, this huge drop in price, is also a way to get on that AI hype. If you want to get in and you want to buy something that is good from a value investor perspective, then Intel is a way to go. I don't know how long it will take for the stock price to go up. It might take a month, a year, 2 years, 3 years. I don't even know if they are going to be good, if they are not going to go bankrupt. There is always a possibility of that. But what I know is that this company is cheap, and that the problem with the high-end chips is not something that is going to destroy this company, and it's actually something that they can repair quite quickly, which is good news. So yeah, in my opinion, Intel stock is a good company if you want to invest in it, if you want to hold a company that's from the USA, that is building a lot of manufacturing all over the world, that is trying to expand, that is trying to compete, that has huge problems coming from the Taiwan semiconductor manufacturer, as Taiwan semiconductor manufacturer is most likely, I'm nearly certain about it, the best company to invest in from this sector, the best one. They just have the level and the strictness of the production, it's amazing. And the price of the chips coming from the Taiwan semiconductor business, the price is the lowest. Taiwan Semiconductor was also a company that Warren Buffett was buying, but he sold it because there are huge tensions between China and Taiwan. So this is one of those aspects that makes it more risky to invest in TSMC compared, for instance, to Intel. It also depends where you are from. If you are from our bloc, so you live in Europe or USA or in any part of the world that cooperates with this part of the world, for you it's safer to invest in Intel. But if you live in China, if you live in India or in any other country that is cooperating more with that bloc, then I would feel much more secure investing in Taiwan Semiconductors as a citizen of China, Taiwan, or any of that country. But still, the risk of war in that region is great, and that can heavily impact the operating business as well as the stock price of Taiwan Semiconductors. While Intel, being mainly in the USA, is a little bit safer. Also, during times of war, the bloc that is like Europe, USA, etc., they don't have any other microchip producer that can fully produce the chip other than Intel. Everybody else is relying on Taiwan Semiconductors. So in times of crisis on this market, Intel will be the defensive safe position. So those are some of the extra factors why I think Intel is or isn't such a great opportunity. But for me, after doing this analysis, I think this is a great opportunity, and I hope that all of the arguments that I presented here will make it viable for you to buy it. And remember, it's a value investing approach. I'm not a trader. It's not going to go up today or tomorrow. You have to buy and hold. Okay, thank you for listening. If you have any questions, feel free to contact me. You can comment. There's a Q&A. You can also take part in answer some questions on every of my videos. You can also see my merch, support me on different channels, etc. If you have any important info or a question connected to Intel, you can also contact me directly. So yeah, thank you for listening, and I hope you will make a lot of money.